with the Bitcoin, BTC, and crypto market appearing to stabilize after last week's brutal crash caused by the collapse of Terra, LUNA. Analysts are offering their takes on where the market may be headed next. And as usual, opinions are divided, with some predicting the bear market is complete, and others arguing that we are still early in the Fed's tightening cycle. Perhaps most optimistic about the digital asset space among analysts from traditional finance was a group of analysts led by Alkesh Shah. Writing in a private note to clients on Tuesday, Shah said that concerns over a so-called crypto winter have little basis other than the negative influence that currently comes from the crypto market's correlation with stocks. Crypto assets still trade like an emerging tech asset class similar to high-growth, speculative risk assets, the note said. It added that crypto is thus suffering from the same headwinds as traditional assets, including increased interest rates, higher inflation, and a rising risk of recession in the U.S. Notably, Bank of America's take differed from that of the Zurich-based private bank Julius Baer Group. According to a Bloomberg report, the bank's CEO, Philip Rickenbacker, said during a presentation to investors on Thursday that we could be seeing a bubble burst moment of the crypto industry. Despite the gloomy short-term outlook, Rickenbacker still maintained a positive outlook for the longer tail. Following the initial comments from Novogratz, the investor once again took to Twitter today, sharing a pessimistic outlook for the near term. One issue with risk modeling is that all the examples of stress in the past 3 decades which lead to bottoms happen in an environment of U.S. Federal Reserve. He further stressed that we are still early in the Fed's tightening cycle, and said this means confidence in models and even intuition has to be lowered. Meanwhile, offering some reassurance for at least the Bitcoin investors on Wednesday, the American enterprise software firm MicroStrategy, which moreover, Kang agreed with the Bank of America analysts who argued that the recent Bitcoin market downturn had little to do with Bitcoin itself.